please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV-18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me, Anuj and Surabhi, and so much of green on the global indices. We had this resistance at higher levels and it was blamed on tax reforms and what have you. But really, the market was just biding time, as it were. And now risk has returned full on, as you can see, in the US markets, and now following on in Asian screens as well. The added advantage for us, of course, is that crude has just dipped a wee bit, always a solace for us if it moves towards 60 rather than towards 63 and 64. That's an added advantage. But for me, I think the big story of yesterday, and that accentuated after market closed, is the rally in bonds. I mean, when we were closing, I think we were around 6.95 or thereabouts, but we ended at 6.88. I mean, this is a kind of level we have not seen in perhaps 3-4 months. So that's once again reminiscent of that big NBFC rally. You know how many bond issuances yesterday? Everything from big boy Reliance down to PFC, REC, Power Grid, and every conceivable finance company was in the market, either for a commercial paper or for a debenture. So I think, yeah, making hay while the sun shines was the motto.
I guess the bond market was celebrating the upgrade a couple of days too late, maybe.
No, they had nothing to do with upgrade. That was the point. Because
that's
for them,
lighter
the FII money doesn't come. But they were celebrating the fact that Reserve Bank is not happy with yields above 7%.
And so therefore the OMO being cancelled because that trigger continuing through the day.
Big deal for them.
Well, okay, so let's just go back and look at the screens again. So right now, as Latha also pointed out, the price of oil is very, very range bound. That's the good thing. And most of Asia is up and about, including, of course, the SGX Nifty. Anuj, good morning. So perhaps, I don't know, was it our mid-caps that saw this coming earlier yesterday? Because some of this started building, you know, in the trade internals yesterday itself, wouldn't you say?
Morning, Surabhi. You know, and we discussed this yesterday that the bank Nifty is at new high, mid-cap has done it. It's a matter of time before Nifty does it. And look, yesterday, while you have to give credit to the bulls yesterday because the global setup wasn't great yesterday. And, you know, just to carry forward the point Latha made, yesterday when we were closing, the Dow futures were actually down. And Europe was also all over the place.
Yeah, because of Merkel's news coming.
Exactly. So in that sense, I think the bulls managed to hold their own. And I think they are now sneaking back in. And the sense I get is that once again we have played out that shallow correction, and once again this market is now ready to reward those who actually bought in that correction. For me, 10,350 is crucial because that would put 20 DMA firmly behind you and take out the risk of a 20 DMA halt on the way up. As I said, Bank Nifty already at new high, mid-cap index nearly there. Today there could be a mid-cap party, in a sense, because mid-caps do well when you get a sense that the market's correction is over. In that case, if you see the template of this market, while the Nifty hasn't done much, the mid-cap index over the last 3 years has more than doubled. So that's really the Indian market is essentially a bottom-up stock because delight, and globally this rally has been dominated by mid-caps, but that could happen today. For the index, I think really the missing piece in puzzle is HDFC. That's still down about 6% from highs. Yesterday also it was down, which was interesting. So let's see if HDFC can start to participate. Maybe that pushes Nifty towards new highs because Reliance has started to do that. Just one more point, the CBOE VIX yesterday was down 7% in the US. Move below 10 could be huge. That's 1 point. And crude, as Latha pointed out, has made a lower high. Move below 60 could be important for crude. And Indian market right now has net shorts. If you see the FI data, there's still about 51% shorts, 49% long. So a powerful short covering is possible. And one more reason for that is if you see this month, the MSCI emerging market is up 1.2%. MSCI Asia ex Japan is up 1.4%. MSCI India is down 1.2%. So we have underperformed, but chances are that we cover this underperformance. I think sustaining a gap up today is going to be crucial. If we move about 10,350, the setup is there. If the rally has to happen, it has to happen today.
Okay, but the rally is only for stocks. I can tell you the bond rally is over. I mean, it might be a one-day wonder that RBI's bond cancellation triggered, but I don't think this is an RBI or this is an inflation milieu that will allow more rise in bond prices or fall in bond yields. It's a one-day party or maybe at best two. And that's why I think you saw that slew of issuances. Nobody expects the bond rally to last.
Okay, well, on that note, let's actually get you some opinion as well what our wise experts have to say as we get into trade this morning. Mahesh Nandulkar of CLSA says, notwithstanding the current slow pace of activity in the housing real estate market, feedback from developers, lenders and government officials indicates that the turnaround is not far away. He says the government is committed towards its Housing for All program, which implies a large jump in government spends going forward. He believes, however, the real driver is improvement in affordability. Mahesh says developers highlighted that land prices have been correcting and end product price cuts have helped demand, and housing market upturn is likely to be visible during the first half of calendar year 2018 and would be one of the most attractive multi-year investment themes in India. CLSA's topics include housing finance companies, Astral Poly, Crompton and Godrej Properties. Of course, yesterday was just another day of case in point of this massive real estate rally of that was spreading out pretty much across all pockets of realty.
I spoke to Deepak Parekh last week when the upgrade came in, and his point also is that there can be a lot of demand for houses because of the redefinition of the carpet area. But the top guys in Mumbai, there he doesn't expect. This 3 crore plus houses, the amount of inventory is so huge that those guys will not be impacted or will not get any relief. But for the more reasonable houses, especially in the outskirts of Mumbai and outside Mumbai, there have been.
So this is a bit of a dichotomy. You go to Western Express Highway, every ad that you will see on every billboard is a real estate ad. So clearly there's a lot of inventory.
Absolutely. Okay, money market views, and these are important today. Not so much the rupee. Bhaskar Prada of HDFC Bank says the German political uncertainty has aided the dollar as the index consolidates around 94.03. India, he adds, euphoria after the recent Moody's upgrade seems to be waning as the USD INR settles around the 65 per dollar. Pivot expects USD INR to trade in a range of 65-20 today. So I'll just continue with the 10-year bond. That's the more crucial one. Bhaskar Pada says the 10-year benchmark bond yield has dropped from recent high of 7.05. He expects it to trade between 6.88 and 6.91 range today, clearly indicating further gains in bond prices, so fall in yields unlikely.
Okay, let's go close to Nigel for the good news then. Here's Worldview.
Well, good news indeed. In fact, all the U.S. markets, they ended in the green in yesterday's trading session. The talk that maybe that tax reform measures may get delayed, well, that was out of the window yesterday. There was hopes, actually, that we could see that coming about. And if, in fact, there are lower taxes, then these corporates would gain. The key gainers, though, on the Dow, which ended high with a gain of close to around 70 points. We had IBM as well as Verizon. Both of them, in fact, were the top gainers. We had some economic data as well, and leading indicators indicated that that data point was quite strong, because that, in fact, was up by 1.2%. Shifting focus to the European markets, they ended higher in trade yesterday. Auto stocks did very, very well, and that explains why, in fact, all those three indices did end well in the green. Well, in terms of autos, Volkswagen, that ended higher. They're indicating they're going to be investing more than $25 billion in their new brand over the next 4 years. So that was the big gainer overnight, consulting the German president. And there's a strong likelihood that we could see some snap elections. So that's a bit of a worry for the euro in particular. That was weak overnight. The dollar did put on some strength, and that's why it's holding above that 94 odd mark. In terms of peripheral indices, the Swiss market, we don't talk about it very often, but that was high with a gain of close to under 1%. That's because Roche, that was up and about following commentary coming in from Donald Trump on Obamacare. And that's what explains why that market did well. Asian markets doing very, very well this morning. We have the Nikkei that's up more than 1% the last time I checked. And what that would mean is that the SGX Nifty is indicating a positive start. Back to you all.
Okay, all right, Nigel, thanks very much for that. So no one really very perturbed with all that German political uncertainty, at least not over the last 24 hours. All right, let's move on to a big voice that our colleagues have got for you. Mahindra Group Chairman Anand Mahindra says M&M has a robust succession plan in place. More to the point, he tells CNBC TV18's Ronojoy Banerjee that he has given his choice for a successor to the M&M board in a sealed envelope. Mahindra spoke to Ron in Michigan, where M&M has inaugurated its manufacturing unit recently. Take a look.
as somebody who's been tracking the Mahindra Group for many years now, and when I speak with many of your company executives, they often wonder, where will the next rung of leaders come from? You'll have, how will Mahindra Group replace a Pawan Goenka, will replace a Rajiv Dubey, and maybe at some point even Mr. Anand Mahindra. What is the thinking around that, Mr. Mahindra?
But Ranuja, I've been very open about that, and I would argue that as a group, the visibility into our next rung of leadership, our bench of leadership, is clearer than in most other organizations. We have created the group executive board, and my submission to our own board, which follows a very robust succession planning procedure. Here's a food court of leadership, and all of them are potential leaders for any of our businesses that we have. So if you just take a look at our group executive board, you will get a very good idea of what leadership we have. And then if you look at the second rung as well, the succession planning we've been following has been providing a tremendous resource for the board, for the main board for succession planning. So I don't think there should be any doubt that as the succession needs arise, there'll be plenty of resources to fill the gaps.
You had very famously said, right, to your board that if you get hit, God forbid, by a bus, then, they should be ready to pick your successor. I mean, have you started thinking on those lines, Mr. Mahindra?
Absolutely. And you're right. And since the time I talked to you, we changed the expression.
Which is
because we found it very macabre. We called it contingency. We called it the contingency choice.
A euphemism.
Yeah, we needed a euphemism because the board was saying this hit by a bus is rather macabre. So yes, and as I've always said, the board already knows my optional choices to replace me.
So you've already given them
absolutely.
an option. Because, you're a man of many interests, Mr. Mahindra, from books to old maps to wine to yachts. So therefore, I mean, would you want to sort of continue in executive capacity after your tenure, just to sort of ensure that the group remains steady? Because, as I said, the group is becoming wide, diverse. It's already $19 billion now. So it will be quite the tough act to find a replacement for Anand Mahindra.
What is that old thing they say in politics, the Tina factor, right? That there is no alternative, and there's always an alternative. And, frankly, I think that applies even more to the corporate sector than to politics. There's always an alternative.
There is an alternative.
There's always an alternative to all of us. I think the biggest mistake any leader can make, whether it's a political leader or business leader, is to presume that he or she is indispensable. That's when the rot starts.
There you go. You're hearing it from the leader saying never think you are indispensable, and a succession plan at Mahindra is in place. Incidentally, the group, the family, has about 26% shareholding in M&M, the listed entity. It's green across the screens in Asia. As we've been telling you, SGX Nifty is also holding on to a minor gain of about 34, 35 odd points for the time being. Let's focus on stocks then. We've got our team standing by, as always, with the CNBC TV-18 list of top 10 stocks that you need to keep on your radar. Good morning, guys. Anuj, let me start with you. What are you watching out for today? You flagged off the logistics stocks yesterday, and there was quite a run there.
Yeah, and I think that run should get over at least for the day today, because the news is out, so buy on rumor, sell on news could play out. But I think the two stocks that I'm watching out for, one is large cap, one is mid cap. But the large cap stock is IndusInd Bank. Huge delivery buying yesterday. I think I haven't seen this kind of delivery buying in a long time, almost 500 crores. The focus has shifted back to strong stocks, Surabhi, in the banking space. I think you saw yesterday ICICI, SBI, Axis, these kind of stocks were weak, while IndusInd, Kotak, Yes, HDFC Bank, they have started the run again. And this is a stock which has given you an opportunity. It's gone below 20, between 20 and 50-day moving average, and down 8% from peak. Anecdotally, the risk reward turns favorable when IndusInd Bank does that. The mid-cap stock I'm watching out for is Praj Industries. It's a stock I flagged off, about 2 months back when ethanol prices were raised, and it's had a big rally ever since. And after that, it consolidated and had a, crossover of 20 and 200-day moving average. Essentially, 20 and 200-day moving average converged, and then the stock had a big rally and 3 times jump in delivery volumes yesterday. I don't know if there's some news, but generally this is a sign of strong hands buying. So that would be the second stock to watch.
Okay, well, I would think the big story of the morning may continue to remain everything affected by lower yields. So NBFC's yields at 6.88, and much of that gain, or at least half of that gain, came after markets closed yesterday. Slew of issuances, and I could rattle off the names: Bajaj Finance, LIC Housing, Repco, Chola, PFC, Hudco. So most of them finance companies in one form or the other. and either commercial paper or bonds, I would expect that the beneficial impact will continue today.
Okay. Well, on that note, let's move on to Quess Corp. There's some M&A action here. Mangalam morning. So what is the target company like? Is it a good deal for Quess?
It is a good deal for Quess, and Quess historically has grown via acquisitions itself. So now they've acquired a company from the Tata Sons, Tata Business Service Solutions, TBSS, for about 153 crore rupees. As far as the company is concerned, they are into businesses which are strategic gaps for Quess Corp itself, so does make business sense for them. If you take a look at the numbers, TBSS FY17 revenue was about 661 crore rupees. This is about 15% of what Quess Corp did in FY17. But the clincher is they had 8.5% margins, which compares with about 5.3% margins for Quess Corp. So immediately, this deal is EPS accretive. Does it hamper their balance sheet, Quess Corp's balance sheet? Not really. 153 crore cash is about, what, 25% of what they have as of September 2017. They have been shoring up capital. 1100 crore QIP is what they did earlier as well. Valuations too, fairly attractive. Half-time sales and about 5.5 times EV to EBITDA, compares with the company's own valuation multiple of 2.5 times sales and 46 times EV to EBITDA. So that's a positive. Motilal Oswal has written on it. They've increased their sales as well as EBITDA estimates for the next few years, and they've also increased their target price by about 12% on Quess Corp.
Okay, Mangalam, thanks a lot for that. That's Quess Corp, but we expect a big block deal on L&T Finance Holdings today, Nimesh.
Yes, Anuj. So expect a big block of close to $109 million. The seller is Bain Capital. Bain is selling 2% stake in L&T Finance today by block deal. The price band indicated is between 180 to 188, which suggests up to 4% discount. So stock may be marginally in the red today because of the discount offered, but there will be a 90-day lock-in for Bain after today's block, so further supply won't come in, but expect a big block. I'm told already the book is full, so good participation from both DIs and FIs in today's block deal in L&T Finance.
Okay, Bain selling. So clearly Bain replacing its NBFC portfolio with bank portfolio. Okay, well, there was a Jet Airways analyst meet. Sonal, any positive takeaways?
A lot of positive takeaways actually. So basically the company is focusing on cost cutting measures, and it's expecting that the cost per available seat kilometers ex fuel will go down by 12 to 15% in next 3 years. And what are they planning to do in this regard is that they're negotiating their maintenance contract from 1st Jan 2019. They're increasing the productivity measures by reducing the employee cost. Also, the new airplanes that they'll be ordering will be cost efficient and will be reducing their cost by around 15%. All this will lead to an increase in available seat kilometers by 8 to 10%. So overall, a positive takeaway. But since the stock has rallied quite a bit before the analyst meet, a light green on the stock or maybe some profit taking.
Okay, Sonal, thanks a lot for that. Essentially, this would also mean that this cost saving that would be there would be recurring. And the point here is between Jet and Indigo, we made this comparison, is the way the stock has rallied from 500 to 700 is because the market is betting on this cost cutting being recurring. And in that case, the market cap to sales, there's a huge gap. EV to EBITDA, so Jet needs to improve its EBITDA. That's something that, of course, we will find out if it happens or not. But another interesting stock, BCL, Nimesh?
Yes, Anuj. So, heard for the first time, but it came into the radar because influential investors Porunju and Ashish Chuk bought yesterday in a block deal. Porunju bought, in fact, 6.5 lakh shares of BCL yesterday. I was just looking at the company. It's essentially into 3 businesses: distillery, real estate, and vegetable oil. Distillery, apparently, over the next 2 years with the expansion, they'll become the largest players, is what I'm told. So that's a story to watch out. In the real estate, they have unsold inventory of close to 200 crores. Current market cap of this company is 150 crores. So that is one thing which investors are betting on. And the vegetable oil business, where lot of the domestic rivalry is now over. A lot of the other large players are into trouble. There is an excise as well. So import is not feasible. And they have a GST benefit as well. So all the 3 businesses are expected to fire over the next couple of years from now on, which essentially means that's the key reason why these investors have bought. It's a feedback from one of the investors who bought this yesterday. So they might be a little biased in their views, but I've just looked at the numbers. and it looks like, in FY19 estimated, it can do a sales of 900 crores and a PAT of close to 20 crores. And currently the market cap is just 150 crores. So maybe that's the reason why Porunju and Ashish Chugh bought yesterday in a block deal.
That's clearly not the only distillery stock that is rising. Surabhi never fails to marvel at the way Radico Khaitan and, pin corns are rising.
I hope they don't mix the products, vegetable oil and...
Okay. Well, I think the big stock that we will also watch out for is M&M. Anand Mahindra has inaugurated a factory in the United States, in Michigan, and has spoken to a lot of press people. Naveen, what are the key takeaways?
So two big key takeaways from the M&M interview, Latha. So to begin with, one is their US business. The second one being the plans on their domestic business. Beginning with the US business, what the company plans to do is invest close to $600 to $800 million in the next 4 to 5 years in their US business. On the other hand, one positive development is that the company has got orders worth 180,000 cars for their US postal service. On the other hand, the plans regarding the Indian business, what Anand Mahindra told is that he has alluded to the fact that they won't be worrying on the loss of market share, but they will be looking at growing their SUV pie. So that is one key point. The other one being that they expect a whole host of launches from the company's table, especially in the SUV segment. Also, let's listen into what Anand Mahindra had to say.
Cumulatively, if you look at the money that we have put into Detroit, both in the former MNATC and Manor now, as it's called, Mahindra Automotive North America, it's about $230 million odd. And by 2020, we expect to add another $400 million to that. So we will be looking really at $600 to $800 million of investment in a very short order. It's a very large order. It's 180,000 vehicles that they're looking for, but we are not allowed to talk much more about it than to say that we are amongst the shortlisted 5. It is clearly very exciting. All I can tell you is that why Mahindra? Well, I didn't know until the team here started bidding for the order that postal trucks in the US are right-hand drive. And they're diesel. But beyond that, I'm not really at liberty to say any more about where the contract is at this point in time. We're concerned about the pie growing, not about the share of the pie so much. As long as the pie keeps growing, people shift to SUVs and crossovers, which is happening apace, as you know. We're very happy. As to whether we need a renaissance, well, car companies, sometimes you have winners, sometimes you have losers, sometimes you have real blockbusters. It's a lot like the movie business. So if you ask this question at the launch of the XUV 500, keep in mind we had to shut off bookings because there were lines forming around the block. And that can happen overnight. So we have a number of products ourselves, and so just keep watching.
Okay, so that's M&M and their plans for the US market. But we are back with Mangalam because it seems the government is talking tough, telling FMCG companies to pass on all the GST benefits, Mangalam?
Absolutely. So it's important news as far as regulatory and industry news is concerned, because the CBEC, as well as Hasmukh Adhia, the Revenue Secretary, has urged / warned all these FMCG companies to pass the benefits of lower tax rates. Remember, November 15, 28 became 18% for most of these FMCG companies. They're saying, as per the anti-profiteering clause, you have to pass those prices with immediate effect. What does this mean for the companies? Well, they just have to pull up their socks and ensure that this is implemented across the long distribution chains as well. Does this mean anything for investors? Well, CBEC warning, I'm not sure if investors or traders will sell an HUL, Nestle or GCPL given this warning unless some violation is found. But as of now, important news from the company's perspective.
No, take your point. I mean, if the market is in a roar today, there's no reason why FMCGs will fall, but maybe they could be underperformers if these kinds of warnings are rained down.
Okay, let's see the reaction. Some of them, of course, are unlisted. But Anisha, some stocks in news?
Well, yes, Anuj, I'll start with NBCC and Simplex Infrastructure. Both of them should hold up in the green, given the fact that NBCC has awarded a 542 crore project to Simplex with regards to construction of buildings around IIT Bhubaneswar. Moving on to logistics stocks. Now, they've finally been accorded the infrastructure status, making fundraising for them cheaper and easier. But as Anuj also mentioned, this is something that is
already in the price, and perhaps the upside might be a bit limited on that one. Moving on to Infibeam, that might be in focus because of some newspaper reports which we haven't individually verified. Now, they suggest that the company is in talks to sell minority stakes to Fairfax Financial Holdings. Now, a marquee name coming in may be seen positively by the investors. Lastly, on Videocon, the losses there just seem to expand. The loss reported by the company in Q2 was 885 crores versus loss of around 370 crores. So clearly things not going well for Videocon at all. Back to you.
All right. Thanks, Anisha, very much for that. Okay, let's quickly recap our list for the morning then. Stocks that could see green today are Bajaj Finance, LIC Housing, Repco Home Finance, Chola Mandalam, PFC. These are, of course, all the bond market reactions that we've got with the yields cooling off. Then there's, of course, Quest Corp because of M&A, IndusInd Bank, Praj Industries, Jet Airways, M&M. The logistics plays, Patel Integrated, Gati, All Cargo, NBCC, Simplex Infra and Infibeam are some of the others. Now, stocks that could see pressure today are L&T Finance and, of course, Videocon.
I wouldn't really trust so much about Infibeam. These kinds of rumors keep doing the round, and that stock has been extremely volatile. Absolutely. Not our story, so we don't take any responsibility for it.
And on L&T Finance, I won't be surprised if, initial sort of reaction is bought into as well, because the stock's corrected a bit from the high point, and if NBFCs in general do well, in that case, L&T Finance, although it's corrected a lot and it's a bit of a weak stock in the near term, but maybe this selling could be a culmination of near-term weakness.